is the policy, the premium is $12 million a year. Where are you going to take $12 million and get $250 million guaranteed if you die? And by the way, the $12 million is working. It's building money so that if God forbid something happens, go pull $6 million out. Still got the $250 million of death benefit. As long as the policy's in force and you're maintaining the minimum cost of the insurance, you have your death benefit. So go take half the money, go do what it is you're going to do it. You can't create that leverage anywhere else. And it's tax-free. We take it a step further in our policies, Brock, because not only do we respect the fact that someday you're going to die, which is a certainty. One thing we can say, guys, is we know you're going to die, okay? Cryotherapy isn't around yet. Ted Williams thinks it was, but we don't know that it is. The reality is that we also build in an additional loophole that if you get sick or hurt, we're going to give you access to a ton of that money along the way to pay your bills, up to $1 million to pay your bills. Heart attack, cancer, stroke, trauma, long-term care. You got so many people that are worried about long-term care. They don't necessarily want to pay the premiums because it's expensive and it's a crapshoot. If I use it, great. If I don't, I wasted all that money. In our equation, if you don't, it's either building cash for you, so it's another form of investment, or you're going to leave a big old death benefit to somebody. Something's going to happen. You're going to get some value for your money. And if you happen to have long-term care, well, then you're going to get this policy, this death benefit will pay you $4,000 or $5,000 a month tax-free for 5 years. So I think there's so many misconceptions surrounding life insurance that are so inaccurate. Okay, you cannot, as far as I've seen, you just can't create that kind of leverage. The ultra wealthy have been doing it for years. Now we're bringing it down to the level of somebody that's been very successful in their own right, making $150,000 a year, or has a business doing $750,000 in sales. Congratulations, because guess what? You've earned the right to do what the $5 million person's done or the $10 million person's done. And we'll do it even one step further without any collateral. You don't have to pledge collateral. We'll show you a way to do it. And depending on how you pay your taxes and what you're doing, we'll make it tax-free along the way in the way of a deduction. So IRA, okay, or a 401k, normally if it's a 401k, you're getting the tax break on the money going in. But then what happens? You got a partner in the deal, right? Because eventually your partner, the IRS, is waiting on the end, salivating like Pavlov's dog, saying, come on, take that money out because I'm going to get my taxes, okay? And I was telling Kyle that it's really tragic because hopefully the math works out, because you're deferring money now while you're working and in this tax bracket to presumably pull it out 10, 20, 30 years from now in a lower tax bracket, okay? Well, with the way taxes are, that's so unpredictable. So you're literally making a bet today that it's going to be beneficial to you 30 years down the road, all right? And then at that time you go to take it out, you're going to pay taxes, right? In our scenario, right, you don't have to wait 30 years. We're waiting, 12, 15 years ideally. Secondly, in this scenario of the 401k, if I go to use it and I'm not 59 and a half, got to pay taxes on it. You got penalties involved. In my scenario, there's no taxes, there's no penalties. It's tax-free. There's no penalty for getting it out in the 12, 13 years from now. If I'm 40, 45, 50, I have access to my money, okay? And then the other thing is that the IRA or the 401k, gosh forbid if I get sick or hurt, okay, I might have to go use that money to help pay my bills. So not only do I have to use it, I got to pay penalties on it, potentially. If it's over $10,000, I believe you get that free out for medical costs. But if it's $20,000, $30,000, $40,000, you're going to pay, penalty on that excess money. You got to pay taxes on it, okay? And then you got to go get it. In my scenario, we'll just give it to you out of the death benefit. You can get up to a certain amount of money. You get more for the sicker you are. So we can go from minor all the way up to life-threatening and serious. You can get a chunk of money. So I think our job is to simply get out there and start telling everybody and banging our horn, because we've got something now that the everyday person can use that was only reserved for the wealthy in the past. So there's a lot of people that we can benefit with this story. And the thing is, it's a win-win for everybody. We're thrilled to be doing it. They're thrilled to be having it. So we just got to come together and tell them and show them. So, but there's an unlimited amount of people that we can do good for with this truck product and strategy. So, and that leverage is phenomenal. And that leverage just amplifies your returns. That's what we're going to do. What questions do you have?